guys, what is going on? Welcome back to my Robinhood portfolio. Hope everybody has had a fantastic week of trading. Very, very strong markets, and you can see here in the portfolio over the last 1 month up 17.42%, $15,071.08, which is phenomenal performance for the portfolio. So this isn't the largest 1 month performance, but it is definitely one of the larger. And I know a lot of you are going to ask, is this a typical performance? And no, this is not a typical performance in the portfolio. There's a number of things that have been propelling the portfolio forward. First and foremost, the markets have been on fire of recent. I believe over the last week, they're up 3 or 4% alone. And as you guys know, earlier this month, there was a very nice increase in the portfolio here. 1 day, $10,000 return. At one point, it was up $12,000, and that all has to do with Portola, one of my biotech stocks that I've been holding for quite some time. I thought the price of the stock would jump following a successful FDA decision. That FDA decision did go in the company's favor, and you can see here a very, very nice uptick in the price of the stock, propelling the portfolio forward, as well as this stretch here as well. Portola has been continuing to climb even after that 1 day $10,000 spike. The other key component behind that too is Ford, one of the larger holdings in the portfolio, has also been rebounding as well. At one point it was down, I think 11 or 12% over the last few months, but it has definitely been rebounding, so that's also propelling the portfolio forward. So very strong markets, a great play with Portola, and one of my larger, longer-term holdings that I also do a lot of day and swing trading with, but a larger, longer-term holding has been also trending up. So that has all synergized in producing a 17.42% return over the last 1 month. And you can see here over the last week in the portfolio, $3,356.67. Like I said, the market's really trended up nicely over the last week here, 3 or 4%. And over the last day here, another good day in trading. At one point, I was up about $500 or so before sliding back here, and that has to do with Portola trending back quite a bit here. At one point, even in the negative, but it did rebound before market close. It did trend back here a bit, but still ended in the green, $68.83, with a little bit of extra in after-hours trading here. Again, it did drop down in the negative, but it did pop back up nicely here before the end of after-hours trading. So I thought today what I would do is talk a little bit about dollar cost averaging. As you guys know, I put money into the portfolio on a very regular basis, and that is called dollar cost averaging. There's a little bit more sophisticated way of doing it as well, called value cost averaging. But for this video, I thought I would focus on an example of how you can utilize dollar cost averaging to continue to contribute to your positions that you hold. If you have a nice portfolio, you don't necessarily want to add new stocks to the portfolio, but you want to add money to the portfolio. How do you do that? And there's a couple of different ways to do it. Like I said, dollar cost averaging is the easiest way. You don't really even have to think about what you're doing with that. Then there's value cost averaging, which is kind of an offshoot, an iteration of dollar cost averaging that's a little bit more sophisticated, and you're putting money in at different rates. Rather than dollar cost averaging, you simply put in money at a very steady rate. So let's kind of scroll down to the portfolio here. I have it set up a little bit differently today. On the right side there, you can see the total dollar cost holdings of all of my stocks. So for example, you can see Portola here, I have $28,883 in that particular stock, and it's in the red because it ended today in the red. So if I click on that, you can see it was down 1.16% today, so that's why it's in the red. Another stock here, Abbott Laboratories, I have $2,249.86, and you can see it's in the green because it trended up here nicely today, 1.73%. And you can also see that in the graphics here as well. You can see this is below the zero line, above, red, green. I think a lot of you guys who have been on the platform for quite some time kind of understand that. But for new investors, just wanted to point that out. On the right there is the total dollar amount that I have held. On the left, you can see the ticker symbol as well as how many shares I have. And then if the number is green, it means the price increased today. If the number is red, it means the price of the stock decreased today. You can see here Portola is one of my larger holdings, Abbott Laboratories. If I scroll down here, Ford is my largest holding here. You can see $35,083.16 there. And what I was mentioning earlier, the stock had pulled back quite considerably over the last year here, 9.04%, but it is starting to rebound here, as you can see. Over the last few months here. If we go to the 3-month chart, I think there's a little bit better picture of this. You can see it's kind of trending down here, but now it's kind of sliding back up here. So over the last 3 months, you're up 5.77%. So again, the portfolio is up 17.42%, but this is definitely contributing to that 5.77%. So going back to the portfolio here, again, you can see on the right all of the holdings with regards to total dollar value. On the left, the ticker symbols as well as how many shares I have. And I wanted to kind of talk a little bit about dollar cost averaging and also briefly mention value cost averaging, but I don't want to get too in depth with that particular style of contributing to the portfolio because it's much more complicated. So dollar cost averaging would be, for example, let's take my pharmaceutical stocks here, ABBV in the middle here, ABBV, LLY, Pfizer, PFE, Portola, PTLA, ABT, Abbott Laboratories. If we take all of those stocks and we want to do dollar cost averaging, what we would be doing is first selecting how much we want to contribute. So let's say we want to put in $10 per week. We would simply add $10 to this stock, $10 to that stock, $10 to that stock, $10, so on and so forth. The only caveat is that on Robinhood, you cannot put in fractional shares, or you cannot buy fractional shares. So as you can imagine here, all of these stocks are greater than $10, so you can't really do that. What you can do is simply buy one share. So you buy one share of Abbott Laboratories, one share of Eli Lilly, one of Pfizer, one of Portola, one of Abbott Laboratories, so on and so forth. And that way, you're essentially dollar cost averaging. You're putting in the same amount of money over a fixed interval. So let's say every week you buy one share, every month you buy one share, every whatever period it may be, every 2 weeks, so on and so forth. You can really decide on that interval, but you have to keep that interval the same. You always want to contribute on that interval. So for example, on Pfizer here, if we take a look over the last, let's go over the last week or so. This is a perfect example here. So what you want to be doing is, for example, if this is a week, let's say you decided to put in money every day. So you would buy one share here, one share here, one share, so on and so forth. So over the entire week, you would buy basically 1, 2, 3, 4, 5, 6, 7 shares over the entire week. But you can see here, you're going to be buying at a different price every one of these particular buys. Sometimes you're buying it low, sometimes you're buying it high. And that's where the dollar cost averaging comes into play, because what you don't want to do is instead, let's say, for example, you're putting in $10 for each one of these. So over the whole week, you're putting in $70, for example. What you don't want to be doing is buying, for example, $70 worth of stock right here. You basically are not taking advantage of these dips down here. What you would prefer to do is buy all 70 of your shares right here when it's at the absolute minimum price, but you can't do that. It's impossible to predict exactly when that's going to occur. You know, you can try to do that, you can try to time the market even, but it's just impossible to do. So the better way of doing this is dollar cost averaging. You're putting in the same amount on a regular fixed interval, and you're basically averaging the highs and the lows. So this one's up here, down here, down here. You're basically going to be averaging this. So the average you buy is right here. So again, you could have bought down here, but you can't really time that. You could have bought up here, which would not be good at either. So you put it in on a regular basis, and you get rid of this up and down pattern with a particular stock here. You get rid of this up and down pattern. You don't have to necessarily try to time it right here and try to time it right here. You simply put in on a regular basis the same amount of funds, and over time, that's the best way of getting the best rate of return. Again, because you cannot time the market. A more sophisticated way of doing this is, for example, let's say you take, let's kind of scroll down here to financials. I don't think financials did too well today. No, they did not. So, for example, let's take some technology stocks here, APL, AMD, Intel. They did very well today, as you can see here. So the price of the stock has increased today. Let's clean that up a little bit. So these 3 stocks here, technology, each one of these stocks increased in price today. But if we take a look at our financials here, way up top, MS and WFC, they both went down today. So value cost averaging would be simply, if you put in, let's say, 1 share of each one of these. Now, for example, maybe today you want to put in 1 share, 1 share, 1 share, but let's put in 2 shares because the price of the stock is down today. So you try to buy more when it's down and less when it goes up, if that makes sense. To even further describe this and make it a little bit more easy, let's say we're buying 2 shares of each of these stocks normally. So every week or every day or whatever the interval is, we buy 2 shares of that stock. Let's do every week, for example, over the last month. So first month you buy 2, second month 2, third month 2, so on and so forth for a year. So you basically are buying 2 shares per month. But you can see, let's say over the last month, these shares are down. Maybe you want to buy 4 shares today, and maybe you only want to buy 1 share of these to average that out. That's value cost averaging. You're basically trying to get the best value in the total amount of funds. And it's a little bit different here. It's much more complicated than what I'm pointing out here. That's kind of why I didn't want to bring it up in too much detail. I have put out videos talking about dollar cost averaging, but the easy way of doing it is simply doing the value cost. Take a look at Target over the last 1 year here. You can see it's dropped considerably. So what you don't want to do is buy all of your shares here or buy all of your shares here. Dollar cost averaging works if the stock is increasing or decreasing. So if you're continuing to buy here, even though that you're losing money because the stock is trending down, you're reducing your cost. You're basically reducing your dollar cost on the stock as it goes down. And as it trends back up, for example, let's see if we can't get a trend up here over the last 5 years. And here you can see it's kind of trended up here over this time frame here. Again, you want to be buying here, here, here. Yes, you're going to be buying at a higher cost here, but the average is still going to be lower overall. So over time, that's where the power of dollar cost and value cost averaging come into play. You simply put money in a good portfolio. You want to pick quality stocks. You put money in, and over time you get a very good rate of return, and you don't have to worry about the up and down in the price of the stock. Over the long term, the price of the stock will optimistically increase. If it doesn't, you just chose a bad stock. The stock market overall returns about 7 or 9% on average per year. And if you do that, that is the best way to put money into your account without having to pick individual stocks, without a lot of the risk involved in picking individual buys like Portola. I got lucky with Portola, Ford as well, but not every investor wants to do that. Not every investor wants to manage their money in such detailed fashion. So you don't have to do that. You can put money in regular basis, a quality stock, and over time your equity value increases, and the rate of the return also is not contingent on any wild swings up or down in the price of the stock. So that is dollar cost averaging. That is value cost averaging. I have been doing both of those since I opened this portfolio. Again, the market's been very, very strong. A couple different things played a part in my last 1 month's performance. Very good performance. This is not typical. I don't want to give that impression, but definitely wanted to show you guys what is possible if you make the right plays in a strong market. So kind of with that, I'll end the video. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. I hope you guys are learning. I hope you guys learned a little bit about dollar cost and value cost averaging. As always, if there's any questions about anything I said in this video, anything I may have said inadvertently incorrect, or something you could add to the discussion, please let me know. I'm always looking to make sure the information is accurate. And again, if you guys have any good investing ideas, any questions on investments, any good stocks, any good strategies that are maybe can be put in play in a special dividend situation, dividend capture, whatever it may be, let me know. I'm always looking for new things to talk about and discuss with you guys. So again, I hope you guys are learning. I hope you guys are having fun with the portfolio. I'm doing the new viewer penny stock challenge. I may do a dividend capture series as well. Again, these are all things that have been suggested by viewers. So very, very grateful that you guys are contributing to the video series and the portfolio. And again, if there's anything you want to see, just let me know, and I'll put out a video if there's enough interest. So kind of with that, I'll end the video, and we'll see you guys next time.